Welcome to The Explainer. Today, we're diving into a market that is sending some seriously mixed signals. You've got tech stocks absolutely ripping, but at the same time, the Fed is hinting at cutting interest rates. And right at the center of all this chaos is this massive collision between two huge forces, AI and crypto. So we're going to break down what financial titans Mike Novogratz and Raoul Pal think is coming next. All right, first up, let's look at the big picture. Because we are in such a strange moment for investors right now. The economy seems to be running hot, but the government is acting like we're headed for a recession. Let's try to unravel this puzzle. So you have a market legend, Paul Tudor Jones, coming out and calling for a melt-up into the end of the year. That is a seriously powerful, bullish statement. But what's so fascinating is where the fuel for this fire is coming from, and it's not where you'd think. And this slide really gets to the heart of the conflict. On one side, you have the actual economy, which is surprisingly strong. It's being driven by massive spending on things like AI data centers. But then, on the other side, you've got the Federal Reserve talking about cutting interest rates, which is a tool you use to goose a weak economy. It just doesn't add up, right? So what is really going on here? Well, it looks like this push for lower rates isn't really about saving the economy at all. It's about managing the government's own finances. When you have a literal mountain of debt to refinance and you want a weaker dollar, the pressure is on. And this whole weird setup is pushing pretty much every major investor to the exact same conclusion. It is time to be long risk assets. We're talking stocks, gold, and you guessed it, crypto. Okay, but if it's such a clear risk-on environment, one of those big asset classes has been kind of sluggish, especially when you stack it up against its high-flying tech cousins. And this is the question on everybody's mind, isn't it? If tech is on a tear, why does it feel like crypto is just stuck? What's holding it back while the rest of the market seems to be gearing up for this so-called melt-up? Well, it turns out the answer isn't really about the global economy. It's all happening inside the crypto market itself. The market's basically just taking a much-needed breather. Novogratz actually revealed that his firm alone sold a staggering $9 billion worth of Bitcoin for just one client. That is a massive wall of selling to absorb. You add in the OGs, the long-term holders finally cashing out, plus Ethereum cooling off from its own huge run, and yeah, you've got a market that's just trying to catch its breath. But this quiet period, this consolidation, it might not last for long, because there is a major event looming on the horizon that could completely change the game for digital assets and frankly, unleash a whole new wave of capital. And that catalyst is regulation, specifically this thing called the Market Structure Bill. Just think about it for a second. Big institutions, pension funds, endowments, they can't just pour billions into an asset if they don't even know the legal rules. This bill, as you can see here, promises to finally replace all that uncertainty with a clear framework. It'll define the rules of the road and basically give the green light that giants from Wall Street all the way to Apple have been waiting for. Now, what's really fascinating here is the big shift in thinking about how to regulate stuff like DeFi, or decentralized finance. Novogratz has this great analogy. The old way was like hooking up every single car on the highway to a speed tracker, just constant surveillance. The new way, it's more like using a radar gun. You let traffic flow, and you just use the natural transparency of the blockchain to catch the few bad actors who break the rules. It's a huge shift from assume guilt to assume innocence, and that is an absolute game changer for innovation. So to see how all these worlds, traditional finance, crypto, AI, are colliding in real time, you just have to look at Novogratz's own company, Galaxy Digital. It's basically running two very different but deeply connected businesses right now. This is such a great story of being in the right place at the right time. So Galaxy starts out mining Bitcoin, but they kept getting burned by unreliable partners. So they decided, you know what? We'll just buy our own infrastructure. They bought this distressed data center called Helios. And here's the kicker. They quickly realized this place was way overqualified for just mining Bitcoin. It was a world-class AI data center, and this was happening right at the dawn of the AI revolution. Talk about luck. And the scale we're talking about here is just staggering. 800 megawatts of power. To put that in perspective, that is enough to power a small city. And all of it is dedicated to fueling the AI boom, already leased out on long-term contracts to the biggest tech companies you can think of. And the business model itself is just almost unbelievably profitable. Once it's all built out, this one data center is projected to kick off over $700 million in free cash flow every year, with 95% margins. Like Novogratz says, it's basically like being a landlord and just collecting rent from the biggest companies in the world. So this contrast is really the key takeaway here. You have the AI data center business, which, while it's tough to execute, is intellectually pretty simple. It's a real estate and finance play. And then you have the crypto business, which is incredibly complex. You're dealing with a dizzying mix of regulation, tech shifts, and market psychology. Two totally different beasts. So let's connect to these two worlds. The ultimate convergence, the real magic, happens when that digital, complex crypto business starts to transform the physical, simple world of traditional assets. And let's be clear, this isn't some far-off, abstract future. Novogratz puts it perfectly. The moment that checkered flag of regulatory clarity waves, you're going to see just how fast traditional finance, or TradFi, gets involved. The floodgates are expected to swing wide open. And the key technology making this all possible is tokenization. It's a really simple but powerful idea. You take any real-world asset, a stock, a building, even a piece of a private company like SpaceX, and you turn it into a digital token on a blockchain. And why does that matter? Because it makes everything easier, cheaper, and faster to trade. It opens up investments that were just totally out of reach for most people before. But here's the twist, and it is a big one. Novogratz calls it the Great Infiltration. The idea isn't that crypto nerds are going to start buying tokenized mortgages. No, it's that the big players, the pension funds, the major banks, are going to start using crypto's superior technology to trade the assets they already own, just in a much, much better way. It's an infrastructure upgrade. And we just can't forget what happens when all of this, the new capital, the new tech, the regulatory clarity finally converges. Because as we've seen time and time again, the final phase of a crypto cycle can get absolutely wild. Which, of course, leaves us with one final, tantalizing question. With this strange macro environment pushing everyone toward risk, with game-changing regulation right on the horizon, and this powerful convergence of AI and crypto, are we about to enter that final, craziest phase of the cycle, the part that the crypto world calls the banana zone, where things just go truly parabolic? Well, only time will tell.